tell you euro at what price. I'm placing short order to sell at 117.122 actually. Let's put this right here, 117.12.2. Yep. So let's see if it will reach this level. So I will sell short euro against United States dollar.
The market needs to sell off further in order to adequately reflect the lack of additional fiscal support from Washington.
Yeah. So look, we've had this pullback from 7-8% from extraordinary highs reached on September 2nd. Our thought was that you could get something much closer to a 10 to 15% zip code from those levels. Potentially with 3,100 being a floor. So yes, we do see that there's downside to this market. So CARES was one of the disappointment on the timing of CARES and potentially the size of CARES is the first thing. The second thing, as we know, has been kind of where the Fed is and some of the ambiguity in their guidance. I think clearly at Jackson Hole, Chairman Powell fired a big bazooka, and you all have been talking about that very thoroughly over the last month. How this is the end of 40 years of Volcker ideology, and where we're no longer going to fight to keep inflation below 2%. We're going to somehow aim for something that average inflation targeting. But the Fed has not yet really specified how we're going to measure that, over what time period, using what metrics. I think the market is frustrated about that, because how do you really try to guess at what inflation or inflation expectations are going to do, and therefore what might trigger a hike?
Lisa, you got one? Well, excuse me, Lisa. Good morning, and I'm just fired up about this. Look, Lisa, you've got the best bio on Wall Street. You start off with your protest leftist burning of buildings at Brown University a million years ago, and now you're working for James Gorman on Wall Street. Lisa, it really works. That emotion is out there right now. We certainly saw that emotion last night. How will the C officers of all our corporations and adapt and adjust to what they witnessed last night? Do they make plans? Do they sit back? Do they cut CapEx by half? Or do they go out and say, hey, there's optimism here, let's go?
Well, I don't know that that there was any optimism to be seen. Look, without getting into the politics of it, my observation is, and I think, some of the folks said it this morning on some of the other, news outlets, the dignity and democracy are the things that took a big hit last night, right? And so I think from that perspective, if I'm sitting in the C-suite and talking about what does this all mean, I think it's preparing.
Okay, as you can see, I opened position on euro at 117.122. That's it. It's short position.
In the economy, and so that's what I'd be talking about.
Lisa, always great to catch up with you and the team at Morgan Stanley. Lisa Shallett there, Morgan Stanley CIO, and looking forward to catching up with Mike Wilson at Morgan Stanley in a few hours' time on Bloomberg TV. Tom Keene, typically we'd sit here and say that what Wall Street would like is divided government. Sort of cliche. At the moment, I don't get that at all from the people that we speak to. It's pretty much the same thing. We need a wave, either color, red or blue, to make something happen, to get that fiscal stimulus over the line.
And I remember it clear as a bell, John, but Bush-Gore didn't get decided until December 12th of that year. So if you use that as a judicial proxy, we're out there with some uncertainty. John, what's changed in the show in the last 2 weeks is a belief there will be infrastructure spending in the first quarter of this new administration, whoever it is.
Yeah, we hope. We talk about it a lot, don't we? Futures, negative 14 on the S&P 500. Coming up later in the next hour, Tom Barkin, Richmond Fed President from New York and London. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. It was billed as the first presidential debate. The last night's event in Cleveland quickly slipped into chaos, and insults drowned out ideas. At one point, President Trump and Joe Biden battled over the coronavirus.
He knew it was a deadly disease. What did he do? He's on tape as acknowledging he knew it. He said he didn't tell us or give people a warning of it because he didn't want to panic the American people. You don't panic. He panicked.
We've done a great job. The only thing I haven't done a good job, and that's because of the fake news. No matter what you say to them, they give you bad press on it. It's just fake news. They give you good press, they give me bad press, because that's the way it is, unfortunately. But let me just tell you something. I don't care. I've gotten used to it. But I'll tell you, Joe, you could never have done the job that we did. You don't have it in your blood. You could have never done that job.
I know how to do the job. I know how to get the job
Well, you
done.
didn't do very well in swine flu.
Moderator Chris Wallace kept trying, mostly in vain, to control that conversation. American and United Airlines are among 7 carriers taking federal loans to help stay afloat. Those loans are capped at $7.5 billion each. Companies accepting the loans are required to put a cap on executive pay. They also must offer the government equity or other financial stakes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Almost everything I see is from the left wing, not from the right wing.
So what are you saying?
I'm willing to do anything. I want to see peace.
Then do it, sir.
Say it. Do it. Say it. You want to call him? What do you want to call him? Give me a name. Give me a
White
name.
supremacists
Who would you like me to condemn?
White supremacists and right
Proud Boys, stand back and stand by. But I'll tell you what. Somebody's got to do something about Antifa and the left.
The President of the United States facing off with the former Vice President Joe Biden. We'll get the follow-on from those comments in just a moment with Kevin Cirilli from New York and London this morning. Good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. The price action shaping up as follows. This Wednesday morning, 2 hours and 12 minutes out from the opening bell, with equity futures down 0.5%. Off session lows, but negative 17 on the S&P. In the FX market more broadly, it's a stronger dollar in G10, a weaker euro dollar 117, just about 117.06, and coming in 1/3%. Outside of that, just the story of the moment is the non-story in the bond market. It's a real challenge for PMs. A bond market that does nothing, Tom Keene. A yield that's still in and around 0.65%.
And one of the themes, John, here that goes back to our conversation with Mr. Prince of Bridgewater and Davos is bonds are an anchor, a dampening of volatility to sophisticated investors' portfolios. And that's vaporized. There's no other way to put it with these low nominal yields, 0.65% on the 10-year.
What do you replace it with? Lisa brought up the whole story of cash. Do you just sit in cash now? Is that the new treasury, Tom? You don't have that allocation like you used to.
Triple
but it's been
leverage
stress
cash,
tested. Yeah. It's doing well, Tom. Well done. You were ahead of your time. Missed out the risky side of the portfolio, but ahead of your time on the cash side of it. But on a serious note, many people brought this up in the last few weeks. Then we got the test this month with a bit of a downdraft in equities and a bond market that really hasn't done much at all, Tom.
Yeah, well, we'll see how that is. And, of course, off Thursday, tomorrow, jobless claims. Michael McKee saying it's just simply still a mystery, the actual unemployed in America, and the jobs report. We'll go beneath the headline data at 8:30 on Friday as well. Right now, we go beneath the headline data in Cleveland. Kevin Cirilli, sleepless in Cleveland and thrilled he could be with us again this morning. Kevin, what will they do today? How does President Trump spin his way forward? How does the vice president regroup after a good sleep last night?
Vice President Joe Biden is headed on a train tour in parts of Ohio as well as southwestern Pennsylvania, battleground portions. That was really what you saw last night in terms of Biden really trying to make inroads with white working class voters, which is a voting bloc that, according to the crosstabs, have still stuck with President Trump. President Trump played to his base last night. Joe Biden really questioned his base in terms of criticizing Bernie Sanders, but something that didn't come up. I mean, there's no way to look at that debate and not say that America lost. There's got 13.6 million Americans unemployed, 28,000 jobs going to be laid off at Disney, and they're voting on a $2.4 trillion fiscal stimulus plan in the House just later this week. I said to Congressman Tim Ryan, he's a Democrat from Ohio. I said, are you going to get on board the train? Are you going to get on board the train with Joe Biden to campaign? He said, no, I've got to go back to the House to vote on this bill. It was a completely divorced from reality moment last night with regards to what Washington's dealing with, the middle class is dealing with regards to this fiscal stimulus.
Kevin, I'm going to go all Glenn Miller on you here. Pennsylvania 65,000. The fact is they're going down to Connor Lamb territory. You spoke to the congressman from Pittsburgh yesterday. What does Connor Lamb think about the vice president's move to the center?
Well, I said that to him. I mean, I asked it right here in my notebook. I said to Congressman Lamb, what did you do that Hillary Clinton didn't do? What did you do that the Democrats were unable to do in 2016? He flipped a district in Trump country, mind you, in 2018. Yep. He said he talked about pensions and the economy. And that's what really the Biden coalition is going to have to do. Enough of the political theater. They've got to talk directly to those specific issues. And that's something that through all of the noise, no matter who you blame, that's something that didn't break through on either side where there's economic issues last night.
Kevin, it seems like Joe Biden and President Trump were speaking to two different realities. President Trump seemed to be trying to fire up his base, whereas Joe Biden, as you said, trying to win over undecided undecided voters. Is that the right strategy, though, at a time when, as John has pointed out, there really aren't that many undecided voters?
Well, you know, and quite honestly, I put this question just earlier this morning to a senior media strategist for Republicans, and what this source told me, essentially, Lisa, was this froze the news cycle. I mean, what you had last night was a political a time bomb that went off, essentially, and everyone this morning is waking up and thinking, what did we watch last night? What did we endure? So if you're C-SPAN Steve Scully and you're plotting out the next week and a half, when we head to Miami for the second presidential debate, it's going to be a very, very different style, especially in a town hall format.
All right, but Kevin, are more people going to turn out to vote after watching this debate, or fewer, given the fact that there were questions raised about the legitimacy of the ballots?
That's the risk. And the last 5 minutes, I bolded this, I underlined it, the last 5 minutes of that debate, really, if you're trying to figure out and calendar out, for, so to speak, November and December, this is going to be a situation where you've got a Supreme Court pick to the High Court, and you've got both sides, President Trump and nominee Biden, saying that they are committed to seeing this all the way through, even if it should go to the Supreme Court. That is a lot of volatility coming out of Washington, D.C. for the next really month, or dare I say 2 months.
Kevin, we're all addicted to this silliness, the Kevin Cirilli world. When do we see polls of what happened last night? Do we see them today? Do we see them this weekend? When do we see, like, the measurement of what we observed?
We'll see them come, I would say, earliest Friday. I think there'll be some snapshot polls, but the real polls will come out Friday and over the weekend, and then into Monday and Tuesday, typically. And just beyond that, I mean, you know, you look at, I was struck by this. You look at how Vice President Biden really tried to moderate last night, both in terms of his tone as well as in terms of some of the policy prescriptions that he talked about. It will be very interesting once this is all said and done whether or not those supporters of Bernie Sanders ultimately come out to support in droves for Joe Biden.
Kevin Cirilli, fantastic reporting as always, sir. Thank you. Kevin Cirilli there, Bloomberg Chief, Washington correspondent. Tom, never mind October 15th in Florida. October 22nd in Nashville, Tennessee feels like an absolute lifetime away. Yeah, right. And there was a discussion immediately after last night as to whether this debate would actually even happen on the 15th, never mind the 22nd.
Who said that?
From what we've heard so far,
say that?
Given how it went, Tom, given how it went, who got anything out of last night?
I think the American electorate,
Democrats or Republicans.
Look, the American electorate sees these guys in their perfectly choreographed campaign garbage. Last night they were out there with Mr. Wallace. They were naked. They were essentially unrehearsed. And I would suggest respectfully, John, there's not enough of that. The British, frankly, do it better.
I would put it to you, Tom, also, that for the President of the United States last night, that was the strategy. The chaos was the strategy. And it made it difficult for the former VP to get off any punches. We can talk about it a little bit more from New York and London.
Hopefully over a pint at a pub before they close at 10 o'clock.
I would love that.
You know.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
From New York and London for our audience worldwide, good morning to you all. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg Surveillance, and here's the price action this Wednesday morning, shaping up as follows on the S&P 500. Futures off the low, still negative 14 and down 0.4%. Story of the moment, bond market not doing much, even with the S&P 500 down 5 percentage points through September. The end of the month, the end of Q3, Q4, just starting. Unbelievable. Euro dollar 117.09. Euro has had quite a quarter. Coming back from the highs of the quarter, which were in at around 120, we come back down by about 1/3%. Just a little bit of dollar strength in the mix once again to close out the month of September, Tom.
Oh, absolutely. And you know, as you say, to the end of the quarter, now's when the mystery starts. I mean, I think there was a wide consensus, John, all along the way, down big, up big. The now what? Tomorrow is the now what day?
Q4 is the now what. Q4 is the now what, facing some serious job cuts. Tom, can't gloss over it. The news from the Walt Disney Company, 28,000 jobs. That's real for a company that employs 220,000 odd, Tom. They're big numbers.
And Royal Dutch Shell, 9,000 as well. These are not 3 and 4% layoffs. Right now, John Riding joining us, and there's 47 ways to go here. On the break, we were going over the penalty kick and the video idiocy in the Premier League. Things are so busy here, we're not going to digress to soccer right now. John Riding with Green Capital. John, you are acclaimed for speaking of the golf course and trying to figure out where the putting green is. Madame Lagarde in Europe today stole from John Riding and talked about the goalposts. Do we know where the putting green is, or is this central banks, plural, and particularly a Fed, making it up as they go?
Tom, I love how you go back to a piece that I wrote in 2004 that leaves the audience totally puzzled about what we're talking about.
That's gold.
But that was a reference to Bernanke when he talked about...
He was worse than Trump there on the debate, John. John was worse than Trump last night on the debate.
Better.
He talked about lagging
Carry
the
on,
putt,
John Riding.
But I said that they weren't, he was just on the green, teeing off. They were a long way from putting. So anyway, the question is, where is monetary neutrality? And I'd even frame it a little differently and say, is it really high interest rates that are a problem in getting the economies back to work? And I would argue it isn't. I would argue there are two things that we really need here. The first, and I hope we get it soon, regardless of whatever administration is in office after January, it is a safe and effective vaccine. That's the number one thing the economy needs, both in the US and in Europe, to get back to work. And secondly, we need fiscal support until we get there. And the fiscal support has dried up. And I would put it to you that what the American public really wants to see And what the European public wants to see is what's the income support that's going to keep us going until we get to that point where people can go back to work and we can get the 11.5 million people who have lost their jobs since February back into bars and restaurants and cinemas, sports events, and so forth.
Is modern monetary theory, whatever it is, whether it's Professor Kelton's definition or anybody else's definition, is it working?
I think that the question to that is, the answer to that is it's too soon to know in terms of whether we get the side effects, and we will know that down the road. I would put it to you that inflation, both as perceived by the public and in the numbers that we have seen more recently, will be more of a problem than the Fed expects. However, for the Fed, that inflation would be a high-class problem, the way they're looking at things, and they've been trying to raise the inflation rate, which, again, I would argue is the wrong way to think about the effects of monetary policy at this point. But in the short run, we are in a situation where the fiscal deficit's large, the government has provided massive income support through at least the end of August, and the Fed has bought an awful lot of those treasuries through the market that was used to provide that income support. So yes, modern monetary theory is the way we are going. And yet, only a year or so ago, there was I think it was a University of Chicago poll of about 100 economists, leading economists, and not a single one of them said that modern monetary theory, the idea that you can run a big fiscal deficit and cover it by printing money, was the way to go. And yet last week we had the Richmond Fed president at the Money Marketeers in New York saying that the Fed issuing bank reserves, now in an era of interest on reserves, is essentially just funding the deficit with T-bills. It's not. We are printing money to finance a good portion of the deficit. And whether that has consequences, we will have to wait. But I think there will be consequences down the road.
Well, John, let's talk about those consequences. We'll catch up with President Barkin a little bit later this morning, right here on Bloomberg. Your thoughts on what to ask him, John?
Well, I think that asking about that, is it? He was speaking last week on the issue of inflation. He said he didn't think inflation was going to be a problem, but and I think that inflation's not the problem to worry about at the moment, but to ask, after an 18-month review process on monetary policy, but these very fine tweaks that we have made, the Fed has made to this inflation target, something that the general public can really understand, something, John, that your mother and my mother would understand. And I would say not. In fact, there's some interesting work that says that if you interview the public and ask them what the Fed is doing, 40% of the public in this survey of 26,000 people said that inflation, the Fed was targeting a 10% or higher inflation rate. So I've said we're in a bit of a Thomas Aquinas debate, of the Fed debating on how many angels can dance on a pinhead here, when perhaps the real problem is we are now locked into zero interest rates, at least through 2024, on the Fed's new operating procedures. And don't we have to take financial stability considerations down the road? What we're doing now is absolutely essential, but we didn't get out of this accommodation in the last cycle, and that left us with a high degree of leverage. Are we not going to build up leverage again in this cycle, keeping those rates predictably at zero for the next 3 or 4 years?
John, I know a bearish journalist that's going to jump in a minute and ask you about financial stability. Don't worry about that. But for our respective mothers, you know what they say every time we get on the phone. The price of food's going up. The price of shopping is going up. And the one question that this Fed still can't answer, and Chairman Powell has been asked it multiple times, how do you communicate to Main Street that higher prices are a good thing? John, why can't they answer that question?
Well, I would put it to you that there is no good answer to that question. And if you ask them, they're very technical answers. Some approach would be to say, well, a bit of inflation allows us to cut real wages in certain industries or to engineer negative interest rates. And then you ask your mother, my mother, they're going to say, well, negative interest rates in real terms, that's just eating into my savings. So I think it's very, very difficult. I think it is a problem the Fed's trying to solve that the public doesn't even see as a problem. If anything, the public sees a lower inflation rate as a plus, not as a minus.
All right. John Farrow, I will confirm your view of me as the bearish Debbie Downer over here. John Riding.
Just for the sake of this conversation, of course.
Well, but John Riding went right there, and this is an important one. You're talking about inflating asset prices, the potential for bubbles. Here the question is to me, without fiscal support, can the Fed avoid risking bubbles, or frankly, avoid having asset bubbles by propping up prices at a time of 30,000 layoffs in the airline sector that'll come due tomorrow without additional aid, 28,000 of Disney? We keep repeating these numbers. These are big numbers. They will leave long-lasting scars, John. How do you explain the asset prices without just calling it a bubble?
I absolutely agree with the point you're making here, Lisa. We need fiscal support. It's the fiscal bridge supported by monetary policy that gets us through to the post-vaccine economy. And right now, the fiscal bridge, they've stopped constructing it. And we hope the debates that go on between Speaker Pelosi and Treasury Secretary Mnuchin will lead to something constructive in the next month or so, because people's income supports have run out. The good news is that there should be, we've seen an accumulation in total, unfortunately not for any individual, we can't say for any individual household, excess savings of $1 trillion due to that income support. So there is something left over in the tank, but monetary policy cannot replace the fiscal support. Monetary policy can only support that fiscal support at this point, because keeping up the price of airlines, keeping up the price of cruises, or no one's going to be cruising for an awful long time. It isn't going to put those jobs. They aren't going to keep people in those. It's not going to keep those people in those jobs.
John, always wonderful to catch up with you, sir. John Riding of Breen Capital, thank you very much. The headline this morning from the Walt Disney Company after the close yesterday will be cutting up to 28,000 jobs. This coming after American Airlines are looking at furloughing 19,000 employees. We've seen the number 12K associated with United Airlines. And the really important piece here, Tom, is something John hit on again in that conversation. We had a labour market shock in spring. We did not have the corresponding income shock because of the fiscal assistance. These job losses, will the fiscal support be there in the same way? And that's the debate Lisa keeps returning to down in D.C. And, Tom, that's the most important one, I think, at the moment.
What was tragic in the debate last night, John, is all of that was alluded to but never really discussed. It was a very, culture war debate and all the other themes they brought up. I don't have to rehash them. But, John, what you just described and the lack of income support, and to hear a guy out of Cambridge like John Riding saying, let's go on stimulus. I mean, the urgency here for a president when they're decided, when they're inaugurated, is profound. I mean, it borders on LBJ after the assassination of Kennedy and the action plan that LBJ had.
Where is the action plan, Lisa? Where are we down in Washington? I keep hearing the happy talk from both sides in the last 24 hours. We're close. Talks are going well. Are they going well?
Well, we're going to find out today. We don't really know. My issue is the longer we wait, the longer the scarring, the bigger the scarring. These tertiary, the secondary layoffs that we're seeing now are of a different nature, John, and arguably have longer lasting pain associated with them.
Coming up in the next hour, we'll get the Fed speak for you. Tom Barkin, the Richmond Fed president, joining us shortly right here on Bloomberg Surveillance. Our very own, one of the best, in fact, the best Fed reporter out there. Bloomberg's Michael McKee will be joining us a little bit later. Equity futures down 18. We're negative 0.5% on this Wednesday morning. Good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Last night's presidential debate in Cleveland made one thing clear. The two candidates can't stand each other. President Trump and Joe Biden hurled insults throughout the hour-and-a-half-long event.
But he knows he's a liar.
But you
I just want to make sure.
Joe, you're the liar.
I want to make sure.
You graduated last in your class, not first in your class.
I want to make
Mr.
sure.
Mr. President, can you let him finish, sir?
No, he doesn't know how to do that. He has,
You'd be surprised.
You picked
You'd be surprised.
the wrong guy, the wrong night at the wrong time.
Listen, you agreed with
Here's
Bernie
the deal.
Sanders to the manifesto.
The whole idea.
Let him.
There is no manifesto, number
Please
one.
let him speak, Mr.
Number two.
You just lost the left.
Number two.
You just lost the left. You agreed with Bernie Sanders on a plan.
Folks,
absolutely agreed
do you have
to,
any
and under that
idea
plan,
what
you
this
socialized
clown's
the
doing?
Moderator Chris Wallace of Fox News tried to stay in control, but had little success. And the Trump administration reportedly is wide-ranging immigration enforcement arrests next month, according to the Washington Post. The raids would take place in cities and jurisdictions that have adopted so-called sanctuary policies. The move is seen as amplifying the president's law and order campaign message. Apple's giving CEO Tim Cook new equity awards that could provide him with as many as 1 million shares by 2025. That could be worth up to $114 million for Cook. They're the first equity awards he's received since he became CEO in 2011. Cook became a billionaire earlier this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Mercedes-Benz is on a path towards CO2 neutral mobility, so we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
So here's the deal. This man is talking about a vaccine. Every serious company is talking about maybe having a vaccine, done by the end of the year. But the distribution of that vaccine will not occur until sometime beginning or the middle of next year to get it out.
The former Vice President Joe Biden there facing off with the President of the United States, Donald Trump. Much more still to come throughout the day right here on Bloomberg on that debate. Live on Bloomberg TV and radio, this is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. With equity futures down 19 on the S&P 500, we're off by 0.6%. We do improve off the lows from overnight, but we're still negative. In the FX market to close out a quarter, euro dollar 117.12. The happy talk of Europe really peaked at the start of Q3 and then rolled over just a little bit. 117.12 in the bond market, 0.65% is still your yield on a 10-year. And maybe, Tom, from now on, I'll just tell you if that's no longer the yield on the 10-year and save everyone the check of the Treasury market.
No, 2-year yield comes in a little bit, John, to 4 digits, 0.1230 on the 2-year yield. I'm watching that carefully. We are privileged at Bloomberg Surveillance for radio, for television worldwide, to bring you a lot of fancy people. I don't mean fancy meals, fancy dinners. I'm talking fancy economics, fancy politics, lots of fancy degrees. None of that matters. If you're a kid out of Lyon and you're a chef and you build a food restaurant empire in this pandemic, what you're observing really, really matters. This is without question our most important interview of the day for small business America and those trying to survive this pandemic. He is Daniel Boulud. You know him from his restaurants, and he joins us this morning. What are you going to do, sir? Good morning. Wonderful to have you with us. What are you going to do in the next 30 days to keep your team employed, to keep going forward, and to avoid the reality of this pandemic in New York City?
We are getting ready for tonight for the opening inside for 25%. Of course, that 25% occupancy is unsustainable when it comes to the economic. It's unsustainable for any business, and some of them they're not able to reopen, period. But I decided to transform the restaurant into sort of I missed going in the south of France this summer, and I go every year. And I said, well, maybe I should bring a glimpse of the south of France. So, of course, it always starts with the food, but we also put up the decor. A young architect and artist, Stephanie Gotto, helped me set up a decor. I raised a little bit of money with sponsors to make sure that, my priority was to protect my staff and to be able to bring back more staff.
From a business standpoint, is it more efficacious to receive assistance from the government and wait for the vaccine, or is it better to struggle forward with this limited occupancy?
I didn't really think of the first. I went for the second, and we have been struggling. It has not been easy. We lost a lot of staff, and but I'm very positive in a sense that having started early by doing a lot of initiatives, from doing charity meals with Food First Foundation and SL Green, to opening 2 of our restaurants in New York, to take one of our restaurant, Café Boulud, to the countryside. I have brought almost 35% of my staff, and I think I'm very proud of that. And that's not mean the economic are beautiful, but at least we are protecting the business and the jobs, yes.
So, Chef Boulud, as you reopen at 25% capacity, there's a lot of discussion about the state of New York City, people moving out, clients not taking their business members out for dinner. Are the clients still there for you to eventually reopen to the same degree that you once were?
We have so many regular customers who say, please let me know when we open inside. What we want is our customer to be very disciplined, very careful, and we want ourselves, of course, we train our staff and our team to be also very careful and very disciplined with the process. We have also made alteration to our HVAC. We have done, of course, many different steps to ensure that safety comes first, of course, and also for our staff as well. We have a regular checkup all the time with our staff, and we want to make sure that guests and employees feel very safe to be inside. And I think that's the case of every restaurateur today. They try to really be on par with their responsibility of opening inside.
Daniel, before we let you go, forgive me for getting a little bit sentimental, but I grew up in this industry. I watched my father run several restaurants. I know how tough it is. But I also know what it means to people who work in this industry as well. It's a sanctuary for people down on their luck. It's where people go when they've lost a job. It's where people go to get the first job. And for young aspiring chefs in their teenage years right now, Chef, I'm just wondering, what's the message for them as they want to get on the chef side of the pass? What do you say to them right now as they look around and see our world being decimated?
Now, people who love the hospitality, the restaurant business, cooking, and service, I think they should try to find a job at any level. It don't matter what type of restaurant it is or what type of business. I think it's important to have experience right now and to be hopeful and positive, because I think we will get out of this pandemic and we will be stronger, and we certainly will have learned a lot through it. But my message is to stay positive and try to keep learning in any which way they can about their profession, their cooking. I mean, choosing to be a chef it shouldn't be a very expensive proposition to go to, always to go to school. You can directly apply into a restaurant and start cooking as well.
Chef, fantastic to catch up with you today. Come back soon. Chef Daniel Boulud there on the situation in New York City and beyond. Tom Keane, this is so tough for so many people in this industry right now. And I think we always forget the other side of the industry. For many people, this is where they turn to get a job when they're really desperate for a job. And this time around, when you hear about those layoffs at the likes of the Walt Disney Company, Tom, those jobs won't be there to fall back on in the way that they used to be.
Yeah, what's so painful for me, John, is there seems to be, and I'm speaking totally as an amateur, folks, I observe an Asian model that's working. What they're doing in Seoul, what they're doing in other great Asian cities seems to be discipline and process to allow this part of our lives to move forward, and we just can't get it done here.
We hope to get it done very soon and very quickly. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. Price action shaping up as follows this Wednesday morning, following some messy debates over in Cleveland, Ohio. Brace for the next one, I guess. October 15th in Florida. In the FX market at the moment, euro dollar 117.10, S&P 500 futures down around about 19 points. Call it down 20. We're negative 0.6%. I said I wouldn't check it unless something was happening, but I'll check it anyway. A 10-year doing, guess what?
Can't stay away.
0.65%.
Get out of the sand trap.
Oh, dear Lord, Tom.
Get a coffee, get something. What a mess in the bond market as we do nothing once again. This is Bloomberg Surveillance Live on Bloomberg TV and Radio.
we work and live has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Are you defying this retail downturn?
The function of luxury, I think, since the very beginning is the same, is to give pleasure to people. And probably in this period of time, people need pleasure more than ever.
We're in a bull market, but having said that, this is a bull market that's under some pressure.
We're probably getting towards the lower end of this sort of correction phase.
Investors who are expressing their views are starting to show more bearish sentiment.
Rates may never rise. That's entirely possible.
September has been a month of consolidation, and I think October will be the same.
It ultimately comes down to, do you have money or not? And if you have money, you can grow the economy and the households.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A post-debate Bloomberg Surveillance. We welcome all of you on Bloomberg Television, Bloomberg Radio, across this nation after an extraordinary evening observed by all last night. We've had good analysis through the day and the view forward to October 15th, the second debate. But with that as well, our traditional themes. And in this hour, I know we're really going to try to focus on where we are in economics, finance, investment, and that. John, I just got to go to your observation of seeing the debate from London. Was London engaged in the debate last night?
It was the talk of breakfast this morning. I can tell you, Tom Keene, when I went out for breakfast and sat down, it was the talk of breakfast, and I had it there on a little screen, watching it on my phone on YouTube, and the waitress came over and discussed what she thought of the debate with me as well, and I think many people were surprised. But at the same time, Tom, what else did you expect when you were going to put these two people in the same room on the same stage?
You are absolutely dead on in that when they started in last night with Chris Wallace, at times almost debating with the president, to see what they did last night right from the get-go. Lisa Abramowitz, to me, it was widely expected, but then the question is now, what forward? I know CBS has a poll out right now, on the details, but what do you see forward, Lisa?
Well, from the market's perspective, there was a little bit of hope heading into the debate that perhaps there will be a more orderly election season than people had perhaps feared, right? And you saw some people trying to position for, say, an upside surprise of an election that was actually normal. I mean, we are in 2020. That's sort of a shocking development. And that sense was shattered last night. The sense of a contested for Chads or whatever else, or the mail-in ballots, that was simply confirmed by what we saw last night. And Tom, that seems to be what's bleeding into the market mood today.
Let us listen to some of those moments last night in Cleveland.
So you take a look at what he's actually done. He's done very little. His trade deals are the same way. He talks about these great trade deals. He talks about the art of the deal. China's perfected the art of the steal. We have a higher deficit with China now than we did before. We have the highest trade deficit with Mexico.
China ate your lunch. Down 18%. China ate your lunch, Joe.
For those of you that haven't seen this, just a vignette into what we saw last night. John Farrow, the back and forth here, and I really want to drive forward, as we have all morning, John, to October 15th. Steve Scully, of C-SPAN, in a town hall meeting. John, what will you try to observe at a second debate as a gentleman from England?
How about a better question? What do I hope to observe on October 15th? I hope to observe a conversation about policy. There were sound bites on China. What's the policy? When you lose jobs, 28,000 at the Walt Disney Company, what's the policy? When you start to see the labour market still in pain through 2021, what's the policy to offset that pain and help people get back to work? Tom, it's got to be about policy, and unfortunately, last night, we didn't get much of a conversation on that.
Good morning on radio, Washington, and of course, New York and Boston, across this nation on Sirius. I look, Lisa, one final observation before we get to Mr. Morris. Lisa, so much of this seems to be at the margin of garnering the suburban voter. Who succeeded, in your opinion, last night?
In garnering the suburban voter? Look, I've been reading the polls. Some say that Biden had a little bit of an edge with women in particular. I am not going to say that with any conviction, Tom, because I will wait for the polls to come out and I will be sandblasted on every level. I will say, though, that neither of them, the consensus was, seemed to engage voters enough to bring more people to the polls, to bring more people to the voting booth than they would have otherwise. And I think that is the key question and challenge for them both.
In a dearth of discussion on economics, including the American labor economy with claims tomorrow and the jobs day on Friday. Daniel Morris with us now from BNP Paribas, their senior investment strategist. Daniel, what is the state of the American labor economy?
Well, I think what you always look to see for the U.S. labor market, especially when you have shocks like we have now and what you had during the global financial crisis, really is the flexibility. Now, that with that flexibility can come quite a bit of suffering. But when you have so many jobs being lost and an employment rate that we have right now, and clearly very difficult for people, when at the same time you don't have the sustained increase in unemployment benefits the way you have in Europe. The advantage of that, though, is we realize the world is different and is going to be different permanently, and so the economy needs to change to reflect that. And so the advantage of the U.S. system is that it's going to do that relatively quickly, relatively efficiently, and is going to reorient itself towards that whatever that new model turns out to be. And I think that's what you always see in the U.S., in contrast to Europe, where it's a much more softly approach.
Well, Dan, let's talk about policy, the potential for policy, and the outcome for this election. Everyone's doing the same thing, wargaming the same things, going through the same permutations and trying to work out what it means for financial markets. What are the team at BNP Paribas doing ahead of this election?
Well, the first point I'd make is that our perspective is, to some degree, irrespective of the outcome, it, broadly speaking, should be positive for risk assets and supportive for equities and for credit. We really don't see a scenario other than a contested election, but even that, will be limited in time. If we go back to what did happen in 2000, you had the decision after 5 weeks. Markets actually continued to sell off, but by the end of the year, they had rebased and Treasury yields started to come down. And if we do have any kind of upset this time, nonetheless, it will be limited in time. There will be decision. We will have a president. And at that point, we do think the outlook for the economy overall is positive. You are recovering from a recession. Unemployment rate is going to continue to fall. On the margin, the news is going to get better. And that's really, as always, what equity markets focus on.
Daniel, can you square your benign outlook, your more positive outlook for markets and the economy with the layoffs that John was laying out, the 30,000 expected from the airline industry, the 28,000 of Disney? Is this all just priced in?
I would say it probably is priced in, and again, I think it's the reallocation as opposed to permanent destruction. Admittedly, I think we understand not everyone is going to be working in retail in the same way that they were before, probably also in the airline space, and it's going to take time for the new opportunities to present themselves, but it does come back to the idea of creative destruction. We do have to go through this destructive phase, if you will, to get to whatever is on the other side, and that's where government needs to step in and provide people a cushion to get over that period, and arguably where the U.S. is probably less generous than it should be. But it is a necessary process. In the end, if we think about all the debt that's being incurred by governments globally to try to mitigate the effects of the pandemic and mitigate the effects of the lockdowns, ultimately you need economic growth to generate the income to do that. So it is ultimately kind of the only model that you really see able to achieve that, but it can be quite tumultuous in the meantime.
It's an ugly story, Dan, but I just wonder from your perspective, the countries, the economies that embrace creative destruction relatively more, say, like the United Kingdom is saying it will do in the coming months, do you think they are the economies that will have that little bit much more dynamism in the recovery and maybe lead the recovery in the years to come?
We do. If you think about, your perspective on the long-term trend growth of the U.S. versus at least continental Europe prior to the pandemic, you always have the assumption that the U.S. is higher, and the flexibility of the labor market is one reason for that. But whatever that gap was that you had in mind before the pandemic, I would argue that it's probably a wider gap now than before, because again, the U.S. is going to adapt, whereas what you see in Europe, even more than you saw post the global financial crisis, is this retention of these supportive policies, which absolutely are good in the short term, say, for consumer demand, but impede the necessity to adjust to what's going to be a different landscape. If you look at the Kurzarbeit, kind of the furlough programs that you have, say, in Germany, that's being extended through the end of next year. You can really argue whether that's something that really in the long run is good for the economy.
Dan Morris, one of our themes this week, we started with John Norman of JP Morgan. I'd love to pick it up with the Mathiness of BNP Paribas, is the correlation value of bonds now. At the zero bound, have bonds lost their anchor abilities to correlate and to hedge other assets, including equities?
Yeah, absolutely. I think that's one of the biggest challenges for any kind of multi-asset fund right now, is trying to find those hedges against, what are always going to be unpleasant, events that can occur. There's always the unexpected negative surprises that you're going to have, and you can't count on bonds anymore. So without question, it's becoming more challenging. We've seen that, with the reaction of gold over the last couple of weeks of real interest rates have risen again. So it's a challenge. I think everyone is struggling with it in the same way that we've been struggling trying to find income across asset classes, but it's just part of this new financial world that we're having to adjust to, and one that I think we all understand is going to persist for a very long time.
Who needs yield curve control when this market's doing what this market is doing already? Yeah. Dan, great to catch up. Dan Morris of BNP Paribas Asset Management. Thank you, sir. One thing we haven't touched on this morning, Tom, the data out of China continues to do well, continues to improve. The PMI's out overnight. I believe the new export orders in positive territory for the first time in quite a while as well. That's encouraging.
And the president was not able really to articulate it last night, but definitely his feeling is, along with other optimists of the economy, that there is a trend of recovery going into this mystery of the fourth quarter.
We hope that continues. Lisa, I don't know if you saw the note from Kit Jukes over at SocGen early this morning. The first line, Asia is winning. And right now, in terms of the economic data, China seems to be leading the way in just engineering a recovery that looks a little bit more sustainable. Early days, I think the data is still very, very noisy. Can't always just be that mechanical reopening of the rest of the world that they're leveraging, but certainly it's there and it's being talked about.
Yeah, although to go back to Tom's point, this is a health issue, right? This is a health crisis, and certain countries in Asia are handling it, frankly, objectively, better than the West, right? I mean, they're coming up with better tracing. They're coming up with faster and more prevalent testing. And these are the things that are necessary to keep the viral counts down, to give people confidence to actually go out and live life. And I think, John, that may be what we're seeing in the data.
They said that about Europe only a couple of months ago, and that story just changed.
Fair point.
Just like that.
All right.
Coming up on this program, Bloomberg contributor and former McCain manager Rick Davis will be joining us from London and New York this morning. Good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. It was billed as the first presidential debate, but last night's event in Cleveland quickly slipped into chaos and insults drowned out ideas. At one point, President Trump and Joe Biden battled over the coronavirus.
He knew it was a deadly disease. What did he do? He's on tape as acknowledging he knew it. He said he didn't tell us or give people a warning of it because he didn't want to panic the American people. You don't panic. He panicked.
We've done a great job. The only thing I haven't done a good job, and that's because of the fake news. No matter what you say to them, they give you bad press on it. It's just fake news. They give you good press, they give me bad press, because that's the way it is, unfortunately. But let me just tell you something. I don't care. I've gotten used to it. But I'll tell you, Joe, you could never have done the job that we did. You don't have it in your blood. You could have never done that job.
I know how to do the job. I know how to get the job
Well, you didn't do very well in swine flu.
Moderator Chris Wallace kept trying, mostly in vain, to control the conversation. American and United Airlines are among 7 carriers taking federal loans to help stay afloat. Those loans are capped at $7.5 billion each. Companies accepting the loans are required to put a cap on executive pay. They also must offer the government equity or other financial stakes. Bloomberg's learned that Boeing will move all assembly of its 787 Dreamliner to South Carolina. That's a blow to the Seattle area and Boeing's unionized workforce there. It's not clear how many employees would be affected by the move. Boeing had said in July it was studying options to handle a slowdown in demand for the 787. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Are people afraid of calling you because their own credit ratings might go down if it's known that they have to borrow money from the IMF?
If you're a president of a country in trouble, you better call.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Upside surprise on the economic data in America. Let's get the data with Bloomberg's Michael McKee. Hey, Mike.
John, it's the ADP employment report, widely watched, if not very widely respected. 749,000 jobs in the month of September, according to ADP. That's more than forecast. The consensus had been for 649. The history of ADP is that it doesn't match up very well with what we've seen from the government numbers. However, in recent months, if you want any kind of encouragement, it is that the ADP numbers have come in lower than the government figures for private sector employment. So ADP, 749,000 large businesses were the big contributor with 297,000 100,000 jobs created. Service providing jobs up 552,000.
We're going to leave it there for a good reason. Mr. McKee getting ready for a really important interview. For all of you on radio and television, please stay with us. In this hour, Michael McKee with the president of the Richmond Fed. Right now, we consider the debate. We consider it from the Republican side with the gentleman assisting Admiral McCain, Captain McCain, over the years. Rick Davis joins us. He's been wonderful as a Bloomberg contributor. Who is managing the president, Mr. Davis, or was he out there alone last night? How alone was President Trump?
I think that it's pretty clear by now that nobody manages Donald Trump but Donald Trump. And so this is a strategy that he concocted on his own. I mean, I can't imagine sitting around Air Force One, flying back for an event saying, hey, I think you ought to be way over the top and too hot. I think you ought to just interrupt Chris Wallace and Vice President Biden as much as you possibly can. And that's really going to convince those women, suburban voters that you lost in 2018 to come back to the fold. I think this was all concocted by Donald Trump, and I think that he's going to pay a price for that.
There is a tradition in your world of a switch goes off and you move to the middle. Did the switch go off for Vice President Biden last night to move from a progressive liberal left back over to the Democrat Party middle?
Yeah, I think that switch probably went off during the primaries. It was pretty clear that part of his job last night was defend himself from the same attacks he got from the liberal left, but this time coming from a conservative Republican president. Trump tried to hold him accountable for the liberal left, and he was having nothing to do with it. If there was a clear moment in the debate, it's exactly, Tom, what you bring up, which is Joe Biden positioned himself in the center of his party, basically in the center of American public thinking, and was able to defend that pretty well.
You said that President Trump may pay a price for coming in too hot. What do you mean? How is he going to pay a price?
Well, he's down in almost every single battleground state right now. He's down nationally, and there are states like Georgia and Arizona who weren't even battleground states 4 years ago that are now in play, where indications are he's either even or maybe even a little bit behind in Arizona. So he had to make up ground last night. And we're now within about a month of elections. 1 million people have already voted, and he's running out of time. And last night was an opportunity to try and get back in the race, and there was nothing I saw that put him there.
Rick, always difficult to get a read on these things, but I just wonder what your read is right now. On this whole debate about owning the center, do you think the Republicans have energized the left to such a degree now because of the Supreme Court that it's enabled the former VP to be a little bit more bolder about owning the middle ground?
I think that this is who Biden is, right? I mean, he was going to run the race he was going to run. It didn't help him in the early primary states, but he kind of stuck to it. And now he's going to get the benefit of that. In the old days, when I was managing campaigns, you ran to the right in the Republican Party to get the primary nomination, and then you ran to the center to win the general election. Opposite in the Democratic Party. Biden actually never really ran to the left. He did a few head nods and deals with Bernie Sanders and Elizabeth Warren, but he stuck to his centrist positions that he held most of his life, and that's now paying some dividends for him.
Debates October 15th and 22nd. If you were back on a campaign trail, Rick, what would you be saying to the president right now? And who's left to convince? Who's left undecided ahead of November 3rd?
I think the whole audience last night for this debate is the same audience that the president needs to be talking to, and that are the disaffected Republicans who voted for him in 2016 that enabled him to build a winning coalition, even by the slimmest margins, and who abandoned him in 2018 and brought in a huge Democratic victory in the House of Representatives. So he needs them back, and by and large, they're suburban women. And I think he's got a message he can portray to them, but last night lacked any cohesion. 4 years ago, he could talk about Make America Great. We heard nothing like that as a core message last night. So I think he's got to start taking debates seriously. He can't just fake it, which I think is most of what he did last night. And he's got to get into debate prep and start focusing his message both on Biden and on his own central core. What am I going to do for the next 4 years for you?
Rick, let's say you were given the thankless job of moderating the next debate. What would you do to try to bring...
I heard Tom in the prep talking about that. No thank you, Tom.
Well, okay, so no thank you, but let's say it was forced upon you. What would you do to try to bring more order to the discussion?
Yeah, I think you got to set the tone very early. I've been through a lot of debates with presidential candidates over the years, and the moderators that tend to have a good debate are the ones who really set the rules up front and require everybody to adhere to them. I think Chris Wallace lost that debate in the first question. First of all, the contestants didn't even adhere to the question that he asked. They got off track, and he didn't pull them back soon enough. I think that if he had stayed on the beat and tried to keep the two contestants in message, he would have been much better off.
Rick, what do the Republicans do after a one-term Trump or a two-term Trumps? What do your Republicans do?
Well, I think a lot of that matters, whether it's a one-term Trump or a two-term Trump. And it's really questionable in my mind as to what is the Republican Party after this. One of the things that is going to be a price to be paid is the comments that Donald Trump made last night, or maybe the comments he didn't make about white supremacy and some of the more radical elements of that movement. By not actually actively going out and putting that down and disavowing them, he's now created a news story that is going to be attached to Republicans, not just his campaign, but Senate Republicans, House Republicans, governors, legislative candidates. And so I think that there's got to be a reckoning within the party as to who we are and what we stand for. We're lost our fiscal responsibility messaging. You know, we are all over the map on foreign engagement and support for our allies. And these are rock bed Republican views that right now are kind of a jump ball. Maybe the Democrats will adhere to some of them.
Rick, great to catch up, sir. Rick Davis there, Bloomberg contributor. Got to get some breaking news in the last 10 minutes or so. It comes from Continental. Think auto parts, think tires over in Germany. They could be slashing 30,000 jobs. They've approved a restructuring that could lead to 30,000 layoffs. Tom, you put this together with the announcement from the Walt Disney Company to slash about 28,000 jobs. This company also has a payroll of about 230,000, Walt Disney Company 220. We're talking 10% and change, Tom,
yes,
of the workforce, just like that.
Exactly. That's what you do, folks. You go to the terminal, and it's usually 3 or 4%. And, John, 10% is not 3 or 4%.
Coming up on that, a conversation with Thomas Barkin, Federal Reserve Bank of Richmond President and CEO, next and live right here on Bloomberg.
you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
From London and New York, good morning to you all. For our audience worldwide, alongside Tom Keene and Lisa Abravis, I'm Jonathan Ferro. This is Bloomberg Surveillance Live on Bloomberg TV and radio. 1 hour away from the opening bell in New York, here's the price action, with equity futures bouncing off the lows, almost getting back to positive territory, down around about a third of 1%, off by 10 points. In foreign exchange, euro-dollar 117.15. In the bond market, we do nothing. Every single guest, every market participant, trying to answer just one question. What on earth do you do when a debate goes a little something like this?
I paid millions of dollars in taxes, millions of dollars of income tax. And let me just tell you, there was a story in one of the papers. I paid $38 million 1 year. I paid $27 million.
Show us your tax returns.
The President of the United States with the former Vice President, Joe Biden. Tom Keene, I think everyone's trying to answer that question, and the answer is no idea. Because of the chaotic nature of how the debate went last night, I don't think a single market participant knows what to do with it.
Now you wonder where we'll revisit the Vice President debate coming up. Not all that important, to be blunt, but October 15, we drive forward, and we do it, John, as a backdrop of an economy moonshot down, moonshot up. And now, John, you know, there's no other way to put it, into the fourth quarter, the immense mystery of the American economy.
We turn the attention now, unlike those debates, to policy, Tom Keene, and we turn to Bloomberg's Michael McKee for more. Hey, Mike.
Good morning, John. And we are joined this morning by Thomas Barkin. He is the president of the Federal Reserve Bank of Richmond, and we welcome you to Bloomberg Radio and Television Worldwide, and I will tell you that I will not talk over you or insult you this morning. But one of the questions that is, well, sometimes asked in Washington these days, but always on Wall Street is, has the economy started to slow in the latter half of the summer going into the fall? From your perch in Richmond, what do you see?
Well, the economy took a deep dive, as you know, and it did come back quickly when we opened things up. But naturally, you would expect to see that recovery be a little more gradual. Where I see the real challenge now is getting the last 5% of Americans back into the workforce. And that's where I've got my focus.
Well, is that going to happen? What are CEOs, business leaders telling you about their plans to hire and to invest, to spend more money?
Well, there's a lot of uncertainty, starting, of course, with the virus, but also what the demand picture is going to look like next year. And in that context, I do think companies are streamlining, taking the last 5 or 10% and finding those efficiencies. I am starting to hear, though, in the last month or so, some amount of pivoting to tomorrow. And what I mean by that is, okay, we're going to get this behind us. Let's now talk about where we go from here. So I do think they've streamlined, but I'm at least hopeful that as we get into next year, you're going to see them starting to grow again.
Do we see growth, significant growth in the coming year, do you think?
Oh, sure. I mean, first of all, you've got a significant drop. And so we're going to grow out of that significant drop. I think you'll see a very strong third quarter, for example. But even going into next year, I think part of the legacy of rounding over the comps we have from this year is you'll see growth numbers that look strong. I look at more level than growth rates. And so I do think then the question is going to be, what do we look like year over year? And I still think, you know, by the end of the fourth quarter this year, we'll still be down year over year, and it'll be hard to get back to where we were until sometime around the end of next year.
Well, is your forecast assuming we get a fiscal stimulus package? What happens if we don't?
Well, I don't try to assume anything in terms of what happens in Washington one way or the other. So, you know, they're talking, and I think we'll let them figure out whether there's going to be a stimulus package. If there isn't one in the short term, obviously there's some people down on their luck who are going to get less support than they'd otherwise need. I'm more focused on some of the long-term issues, or maybe even medium-term issues. We have a lot of people who used to be, you know, waiters or work at an amusement park who now need new jobs, and their classic next job would have been working, you know, at a retailer, or maybe working at another restaurant. If those places aren't hiring, how do we get them redeployed? And issues of job retraining, issues of getting Pell Grants and getting them funded, those are the kinds of things I think that are important if we're going to bring the economy all the way back.
Well, another major issue, and you have one of America's biggest banks in your district, that is whether or not the economy can withstand as forbearance comes to an end, and we see rising business debts and increased defaults, particularly for commercial real estate. How do you see that playing out?
Well, I do think this fiscal stimulus that we've done has been quite helpful to the financial industry. There are people who have been down on their luck who have gotten stimulus payments, and you actually see credit card outstandings down. You have some small businesses that would have gone under that got PPP money. You've got bigger industries like airlines that might have been much more significantly challenged if they hadn't gotten the money they've gotten. And I think so far, knock on wood, what at least I'm seeing from the banks is still pretty healthy.
What about in terms of their loans and lending, though? There have been concerns expressed that, particularly in commercial real estate, you're going to have a wave of defaults.
I think there will be challenges in commercial real estate, particularly on the retail side, as you could imagine. But then the question is just, are those defaults going to overwhelm the capital of the system? And my sense is there's been a lot of capital building in the last 10 years, and the exposures there compared to the capital in the system don't seem to compare.
If the economy is slowing, if things do turn south, is there anything more the Fed can do, or is it pretty much up to the folks in Washington now?
Well, we have done a lot, and I like to think, as I learned in college, that there's fiscal and there's monetary, and you want to pull both of them as strongly as you can. I'd say in this particular crisis, you could put public health on that list, and I think all three of those are levers we'll want to pull as hard as we can, and the Fed has done a lot. There's, of course, still more we could either do additionally or continue to do. But I'm actually more hopeful on where we're headed next year. And I'm hopeful that what we've done, and also fiscal and the public health authorities, will put us in a much better place.
Well, are you seeing demand for credit out there?
There is some demand for credit. Certainly auto credit has been very strong. Mortgage credit has been very strong. On the business side, I do think people took down their lines in March and April. They've now repaid those. And I'm not seeing quite as much demand on the business side, in part because they spend most of the year with pretty strong cash positions.
One of the big questions about lending is over the Main Street lending program that the Fed runs. You issued a special senior loan officer survey last night that had banks saying overly restrictive terms for borrowers are discouraging them from approving more loans, and others cited the unattractive terms for lenders for not even making loans at all, not offering them. What do you do about that?
Well, I haven't seen that survey, but we designed the Main Street lending facility to play a particular role. It'll be a bigger role if bad news happens and the economy goes south. But if there are loans coming into banks, they get the option of whether to keep them or whether to sell 95% of them off into our Main Street facility. And I'm not sure it's bad news if they're making those loans and keeping them.
All right, the Fed in June banned buybacks by banks and capped their dividends into the third quarter. Should that ban and cap be extended? Big debate right now.
Well, I think we've put in place a protocol that allows us to have a deep investigation into the quality of the capital levels of the various banks. And my view is we ought to do whatever we do on a bank-by-bank basis. And those banks that need to conserve capital ought to be conserving capital, and those banks that have sufficient capital ought to be free to distribute it.
All right, I got to ask you about the new framework and your view that things are going to pick up in the economy going forward. Does that mean inflation is going to pick up as well?
Well, there may well be some inflation, particularly in the near term, if demand comes back stronger than people think at a time where supply chains are stretched. But, you know, our framework is not around any particular month or quarter's inflation. It's much more around where we headed in long-term inflation expectations. And my hope is that those will start to creep up back toward our 2% target.
Well, the new policy is that, of course, appropriate monetary policy, in your words, will likely aim to achieve inflation moderately above 2% for some time. For Tom Barkin, what does moderately mean, and how far above 2%?
Well, let's see when we get there. But I think I gave a speech, Mike, you were there in Idaho a year ago, where I said I'm very supportive of a range around 2% and a moderate range around 2%, whether that's 1.5 to 2.5 or 1 to 3. I think I said is I'm not that focused on the difference between them, but that's something close to, or as somebody put, I think recently, the word moderate means moderate.
Yeah, that somebody was the chairman who also took pains to say over and over in his news conference that the new guidance is strong and powerful, which does not seem to be the read on Wall Street. Why do you think there's a disconnect there?
Oh, I don't know if there is a disconnect.
The analysis on Wall Street basically is that you can move interest rates, but you're not going to have much impact on the economy unless demand for credit picks up, unless something is done out of Capitol Hill.
Well, I just say there's a difference between looking backwards and looking forwards. I think for the last 6 months, we've gone pretty strong in terms of what we can do to support the economy. And now we're looking forward over the next year or two. I think the forward guidance is particularly powerful as the economy comes back, as I think it's going to. And so if you do see a strengthening economy, if you do see modest overshoots of inflation, I think we're going to be having a different conversation.
One of the other things that people are watching in terms of overshoots is the equity markets. Lower for longer, raising financial stability concerns, particularly with PE ratios getting to where they are. Are you worried at all that your money that you're putting into the economy may be ending up in the wrong place, stimulating equity acquisition and share buybacks and things like that instead of stimulating growth?
Well, I'm not a believer that lower for longer means zero forever. I do think I want to normalize at some point, and I want to normalize in part as a response to a healthy economy. So I don't really watch the equity markets as much as I watch leverage levels. And the thing I would be nervous about is if you start seeing leverage in particular sectors that made you concerned. I don't think that's where we are yet.
You're not seeing dangerous changes in borrowing patterns then?
Well, actually, credit card outstandings are down. And, as I said before, the pipelines on the business side aren't overwhelming the bank. So I don't think at this moment in time, that's what you're seeing. But of course, when you do have low rates, that's one of the things you want to watch. But again, I think at this point, the banks are tightening standards, not the other way around. And so I don't really see that as today's issue.
All right, before I let you go, I got to ask you, because I know this is an area of interest for you. Has the financial crisis we're undergoing now changed the dynamic for the economy in terms of inequality? A lot of talk these days about a K-shaped recovery.
Well, if you look at the last 30 or 40 years, the mega story has been the decline in middle-income jobs and the growth of both the high-end jobs and those at the low end. And the sad part about this crisis is those low-end jobs, which are disproportionately low-income, personal service, personal contact workers, waiters, amusement parks, retail folks. Those are the jobs that have been hit the hardest. And I do worry that group of people who have been brought in off the sidelines over the last 5 or 10 years of a healthy economy are now displaced, and their next best job is also displaced. And so this question of, what are the things we can do to help those people re-engage in the workforce and rebuild their careers into some of the places perhaps that are, hotter, whether they be healthcare or manufacturing or construction or whatever. That's a pretty important thing for us to work on. And if we don't do that, I do worry about what that's going to do for inequality.
Tom Barkin, Richmond Fed President, thank you very much for joining us this morning here on Bloomberg. John?
Thanks, Mike.
Michael McKee, great work as always, sir. Thank you. Just take a sneak peek of the S&P 500 briefly as we count you down to the opening bell. We are just about to turn positive on the S&P 500, well off the session lows and negative just 2 points on the S&P right now. So pretty much dead flat on the S&P 500. Tom, I just get the sense that the market and the Federal Reserve are talking past each other.
Yeah.
The Federal Reserve keeps talking about tolerating higher inflation. The market and market participants want to know, how will you engineer it? The Federal Reserve is talking about not hiking if things get better. And market participants want to know, what will you do if things get worse? And I don't think either side are on the same page right now.
No, I would say they're definitely not on the same page. First thing I did was look at five-year forward break-evens this morning, John. And, I'm sorry, there's a whiff of disinflation out there, which is that market worry, and that pushes against some of the Fed optimism that's manufactured.
The conversation will continue right here on Bloomberg alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Coming up around the opening bell, we'll catch up with Mike Wilson, Morgan Stanley's chief U.S. equity strategist.
With the First Word News, I'm Ritika Gupta. Last night's presidential debate in Cleveland made one thing clear. The two candidates can't stand each other. President Trump and Joe Biden hurled insults throughout the hour-and-a-half-long event.
Everybody knows he's a liar.
But you
I just
agree.
want to make sure.
Joe, you're the liar.
I want to make sure.
Graduated last in your class, not first in your class.
I want to make
Mr.
sure.
President, can you let him finish, sir?
No, he doesn't know how to do that. He has,
You'd be surprised.
You picked
You'd be surprised.
the wrong guy, the wrong night at the wrong time.
Listen, you agreed with
Here's the
Bernie
deal.
Sanders to the manifesto.
The whole idea.
Let him.
There is no manifesto. Number
Please
one.
let him speak, Mr.
Number two.
You just lost the left.
Number two.
You just lost the left. You agreed with Bernie Sanders on a plan.
Folks,
absolutely agreed.
Folks, do you have any
And under that
idea
plan,
what
you
this
have
clown's
socialized
doing?
Moderator Chris Wallace of Fox News tried to stay in control but had little success. The Trump administration reportedly is wide-ranging immigration enforcement arrests next month. According to the Washington Post, the raids would take place in cities and jurisdictions that have adopted so-called sanctuary policies. The move is seen as amplifying the president's law and order campaign message. Morgan Stanley is countering fears that the coronavirus will crush demand for office space. Bloomberg has learned the bank has begun looking for a major new headquarters in London. It's assessing options for a potential move from its current premises in Canary Wharf. Morgan Stanley will likely focus on options in the same neighborhood or in the City of London. It wants at least 600,000 square feet. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
If we are strong as a world, we ought to come together. A massive coordinated stimulus can make it so that we have a better economy on the other side than we had in 2019.
Good morning, everyone. Ms. Georgieva of the International Monetary Fund, of course, their annual October meeting changed this year in the pandemic. In conversation there with David Rubenstein, of course, with Carlyle Group, the co-chairman and co-founder, and of course, peer-to-peer conversations on Bloomberg television. Interesting always to see these interviews with executives right now. David Rubenstein joins us here this morning. David, it is so interesting to see our international institutions adapt to a pandemic, but also to the collapse of a multilateral world. What's your scorecard on the IMF from Lagarde to Georgieva? How are they doing in this new world?
Well, Christine Lagarde took over after a scandal from her predecessor, and I think she shored up the IMF and gave it a lot of international credibility. She then left to become the head of the European Central Bank. And then the woman who replaced her And you don't have to be a woman to be the head of the IMF, but there are 2 in a row after 10 men in a row. The woman who replaced her is not that well known. Her name is Kristalina Georgieva, and she is unlikely to be the president of the World Bank. When you think about it, she is from Bulgaria. Now, normally, you get somebody from Western Europe, maybe France or Germany or something like that, heading up the IMF, and somebody from the U.S. heads up the World Bank. But she is so impressive that she was the chief executive of the World Bank, essentially the number 2 job there, and then she became the head of the IMF. Now, during the pandemic, they've had to extend credit to 75 countries that really need money. And for those who don't pay attention to this, the IMF's job is to shore up the balance sheets of countries that basically are in financial trouble. When you have a pandemic, you have a lot of trouble. They've also had to, in effect, put a moratorium on loans being repaid by a number of countries because some of the countries just can't pay them back right now.
When we look at the IMF, David Rubenstein, it is the pulse of international trade. And of course, your work with Carlyle speaks to an international business. Do you buy what we see on the Bloomberg terminal of not a collapse, but just a diminution of trade and goods trade over the last decade?
Well, I'd say in the last year or two, trade has been down a bit, in part because there have been tariffs, in part because there have been trade barriers and other discussions, and also we've had a very bad pandemic that slowed down global economy. I do think it'll come back, and I do think after the election, whoever wins, I think you'll begin to see international trade pick up. But there's no doubt there are a number of countries that are really suffering from the pandemic, and it's going to take quite a while for them to recover.
You know, one aspect of your discussion had to do with China and Asia in general, which is a big part of the emerging world and no longer perhaps can be continued as such. We got was her take, is your take, that China, that its neighbors, is doing a better job at controlling the virus and recovering, or is there something else at play here?
Well, obviously, China, if you believe the statistics, have fewer people die than we've had in the United States, and China has a much bigger population. I think most people are going back to work in China, whereas the United States, a lot of people are still working remotely. I think China is, in our lifetime, going to be the biggest economy in the world. It may be getting there quicker than we once thought. I think the Chinese economy is in reasonably good shape. I think they're in somewhat better shape than we are right now, frankly.
All right, so given that, how do other big investors position?
Well, a lot of investors want to invest in China. There's no doubt that the population is so big that when you have a good product or service there, you've got 3 times as many customers. And so I think a lot of great investments have been made there in the last 10 years or so by Western investors, and I think they're going to accelerate their investments in Asia and particularly China.
David Rubenstein, with your public service in the Carter administration, I have to ask, has there ever been a Carlyle meeting like the debate we witnessed last night?
No, but it brought back memories to me because exactly 40 years ago, I was one of the advisors to President Carter when we had our debate with Ronald Reagan in Cleveland as well. And it was a little more civil than that time, and you didn't have people interrupting each other.
Yeah.
And it was quite something to see, but you know, I'm out of the debate preparation world, so I'll just let others do that. But I would say we don't usually have those kind of shouting matches in our investment committee meetings. No.
If in that time James Earl Carter was brand new at this, I have the clearest memory of him walking off airplane steps to greet Midge Costanza a million years ago, and there was Ronald Reagan driving to the middle for the Republican Party. Can either of these candidates, and particularly Vice President Biden, find a middle territory in American politics, or are those days gone?
Tougher than it used to be. In the 1970s, when I worked on Capitol Hill in the White House, Democrats and Republicans came together in bipartisan legislation. We don't see that anymore. Since the Affordable Care Act, you don't really see any major legislation that's really bipartisan. And that was, of course, that legislation had no Republican votes. Generally, most major legislation in the United States has had, up until the Affordable Care Act, bipartisan support. I think that's gone away for a while. Hopefully it'll come back, but I don't see it happening anytime soon.
In the meantime, apart from the political circus that we witnessed last night, there's a question about the reopening or the reclosing of the economy. I know as a major New York City employer, you have a perspective on this. Given the fact that restaurants are trying to reopen, where are you in terms of your staff coming back to the office and your expectations of how New York City will feature in your footprint?
But we are moving into a new building, One Vanderbilt, and we probably are scheduled to move in January or so. But I think most employees are not dying to come back to work yet. I think most of them are feeling, I can work at home, and maybe I'll work at home 5 days a week. Maybe I'll work at home three days a week. So I think probably it's going to be quite a while before all employees, not just Carlisle, feel comfortable in going back to their offices in New York because of the elevators and because of the commute. It's really safer and maybe easier just stay at home for a while.
David Rubenstein, thank you so much. Peer-to-peer conversations, Bloomberg Television tonight at 9 p.m. as well, and seen around the world. Always interesting conversation. And then the headline, Lisa, from the managing director, the IMF will never have 100% staff working in the office. I mean, that's sort of the history. That's sort of the reality, I should say, we're driving to.
Yeah, well, there's a question, right? What's the future of the office? What's the future of cities? How much is this a transformative moment? And how much is this a pause? And these are some of the existential questions that people think about late at night when they just worry in general what else 2020 has to offer them. Not to be dark.
Yeah, well, we'll see. We say good morning to all of you on Bloomberg Radio and Bloomberg Television, a simulcast. Lisa Abramowitz and Tom Keene, as we drive forward the day, we need to say a particular thanks to our political team for truly global coverage over the last number of hours. I came in this morning, and the first person I saw, Lisa, was Kaylee Lyons, who was helping out Asia with their interpretation of this debate.
Man, you're making our office sound like a sweatshop. Like everyone just sort of hanging out under their desks.
Complete fiction.
Yeah, hanging out under their desks, drinking who knows what. Courtesy of Tom Keene.
There we were, David Weston with the coverage last night, and Cirilli was basically incoherent this morning after a spirited evening.
He nailed it. Tom Keene, Kevin, if you're listening, you nailed it.
He nailed it. There's no question about it. Kevin Cirilli nailed it. We are on to the debates, the vice presidential debate. We look for that here in a number of days. And then October 15th, they do it all again. Futures, they improved, -4 Dow futures, -48. Coming up on television, Jonathan Farrow. Paul Sweeney and I will assist you on Bloomberg Radio. Good morning.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from Customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes until the opening bell. Equity futures recovering, down just 4 on the S&P 500. We begin with a big issue. It's fight night in Cleveland.
You could never have done the job that we did. You don't have it in your blood.
You should get out of your bunker and get out of the sand trap.
This is a horrible thing for our country.
There is no
This is not going to end well.
He's just afraid of counting the votes because
You're wrong. You're wrong.
It's hard to get any word in with this clown. The question is,
radical left.
Will you shut up, man?
Listen,
No,
the answer to the question is no. Ukraine.
No, sir.
With $1 billion, if you
that is absolutely not true.
You're going to have
true.
Gentlemen. I guess I'm debating you, not him.
So that was the reaction on Wall Street. Here's the reaction on Wall Street, rather. For once, there really wasn't much debate.
Last night was the ugliest debate ever.
It was a really tough debate to watch.
We didn't learn much about their policies.
There's a real effort, I think, to stoke fear.
I think that Trump has lost women per se, probably.
He has clearly got a lot of rage and struggling to contain it.
Both candidates were more, having political attack one against each other, more personal.
What has happened overnight?
I imagine, and we'll wait and see, that a lot of people will have turned the television off pretty quickly.
I think that people are going to start realizing that the U.S. electoral risks are severe.
It's going to be really interesting to see what happens over the course of the next two debates.
I hope the next two debates happen.
And of course, they will happen, according to both parties. How will people react to it? That's uncertain. A CBS News poll taken after the debate finding that 69% of viewers described themselves as, quote, annoyed. 19% said they were pessimistic, and 17% felt informed. Let's bring in Kevin Cerulli, shall we, for more. Bloomberg Chief Washington Correspondent. Good morning to you, Kevin.
It was a dizzying aftermath, really, of that first presidential debate. And now, 3 points that I want to make here as it relates to some of my big takeaways. The first is that Joe Biden played to the middle, President Trump played to his base. From here, it's unclear whether or not this will move the polls or largely just leave everyone incredibly frustrated in terms of trying to understand how a Biden administration and how a Trump administration would rebound this economy, albeit in a first or a second term for President Trump. The second point, as we move forward here, is just that the last 5 minutes of that debate really foreshadowing a long-term, prolonged battle potentially that could make its way all the way to the Supreme Court as this mail-in ballot issue becomes front and center post-November 3rd. President Trump and Vice President Biden vowing to follow through the election results well throughout the month of November and, dare I say, December. It makes the Senate Judiciary Committee hearings for Judge Amy Coney Barrett all the more important, all the more pressing, and mind you, all the more fast. It likely will speed up that process. But then finally, fiscal stimulus. We barely heard about fiscal stimulus in last night's presidential debate. This, as the Democrats in the House of Representatives are set to take up a $2.2 trillion fiscal relief bill later this week. I spoke to Congressman Jim Jordan, Connor Lamb, as well as other lawmakers, Senator Marsha Blackburn, and others all throughout the day yesterday, trying to figure out where the common ground is. And you know, Jonathan, I don't think that this fiscal stimulus is likely going to happen before the November 3rd elections. So you couple that in with the
Okay, ladies and gentlemen, I'm going to place a stop on profit for euro at 117.07.2, something like that. Yeah. Okay, let's see. 117.7.2. Let's see. Okay, yeah. Stop on profit placed at this price. Let's see.
Week and a half. Next week, we head to Salt Lake City, where the vice presidential candidate Kamala Harris and Vice President Mike Pence, typically both of them, you know, more senatorial, more stoic in their approaches. So, you know, we'll be there for covering of that. But at some point, they've got to talk about the issues. They've got to talk about China. They've got to talk about the issues. But we didn't get any of that really last night.
October 15th in Florida. Let's hope they talk about the issues. Kevin, get some rest, sir. Kevin's already there. On the latest in Cleveland, Ohio, Greg Valliere of AGF Investments reacted to the face-off, writing the following. He didn't hold back. Last night's embarrassing, cringe-inducing debate was all about Donald Trump, angry, belligerent, breaking all the rules as he crudely mauled Joe Biden, who at times seemed stunned by the ferocity. But Trump needed to win a dwindling group of undecided voters, and on that score, he probably failed. Greg joins us right now. Why do you think he failed, Greg?
I think he failed because centrist voters who haven't made up their minds, I think, were largely aghast at what they saw. That doesn't necessarily mean that they're all going to go to Biden, but Trump went into this as the underdog, and I think he left at the end of the night continuing as the underdog.
Greg, the polls have been stable for the last couple of months. Do you expect them to remain that way?
Pretty much. I wouldn't see any big change. I particularly look at 5 states, Pennsylvania, Michigan, Wisconsin, Arizona, and Florida. Those are the 5 states that make all the difference. And in all 5 of them, Biden is slightly ahead.
As you mentioned, Greg, the undecideds are dwindling. So on October 15th and 22nd, in Florida, in Nashville, Tennessee, who are they speaking to?
They're speaking to a very narrow group of undecideds, but they're also, I think, speaking to turnout.
Bit of a technical issue there with Greg Valliere. Greg, we'll let you go, sir, and hopefully we can re-establish that another time. Greg Valliere there of AGF Investments. I want to get to the price action of the morning so far, around about 24 minutes away from the opening bell. A market that does not know what to do with this. Equity futures are down by 4 on the S&P 500. We're off by a little more than 0.1%. At a market desk with your movers, here's Abigail.
John, certainly lots of confusion about what to make of that debate. But the market right now, the story seems to be coming off the lows. And a big piece of that, of course, big tech, those mega caps. Let's take a look at Alphabet and Apple. At the lows, Alphabet had been down 1.8%, now down just fractionally. This on a report that China is considering an antitrust probe. About 17% of their revenue comes from Asia.
Position closed on euro at 117.072.
After a nice 3-day run, it had been down sharply in the pre-market not so long ago. Now down fraction. It looks like it's trying to flip higher. Will that be the story of the day? Unlikely to flip higher, though, John. The chip stock, Micron, down 3.6%. They put up a decent quarter, but looking ahead, it appears that the first half of their fiscal 21 could be difficult, considering the Huawei ban and also weaker corporate server buying. And then bringing it back to the debate, John, take a look at Twitter, down just 0.2%. Earlier, down just a bit more. Will social media use explode even more in the face of that debate and the next 2 debates to come? Right now, investors sort of snoozing to some degree, despite the very dramatic debate, suggesting unlikely to affect Twitter's corporate profit bottom line.
Abigail, thank you. Thank you very much. Coming up on this program, Disney announcing one of the biggest layoffs of the COVID era. We'll talk jobs and the outlook for the U.S. economy. We'll do that with Mark Zandi, Moody's Analytics chief economist. That conversation's still ahead. Ahead of the opening bell, about 22 minutes away, equities shaping up as follows. On the S&P 500, we bounced back, almost unchanged on the session. A market dazed and confused by last night's mess.
Everybody knows he's a liar.
But you
I just
agree.
want to make sure.
Joe, you're the liar.
I want to make sure.
Graduated last in your class, not first in your class.
I want to make
Mr.
sure.
President, can you let him finish, sir?
No, he doesn't know how to do that. He has,
You'd be surprised.
you pick
You'd be surprised.
the
Go ahead,
wrong
Joe.
guy, the wrong night at the wrong time.
Listen.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This